Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy software stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 technology stocks, specifically software companies that all come in with a strong buy consensus from Wall Street. We're going to take a look at these companies, what it is that they do, and of course what Wall Street analysts are predicting for the stock's future. Just before we get into these 3 stocks, this is a reminder that Christmas is just a couple of days away. The stock market will close early on Christmas Eve and remain closed on Christmas Day, so we'll be gone for a few days, but back at the end of the week with another video. So wishing you all a very happy holidays. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into these 3 strong buy software stocks. First up, we're taking a look at Elastic. They trade under the ticker ESTC, currently priced at about $104 per share. They have seen some ups and downs this past year. Overall, they are down 8% after a big drop off here at the end of August, but in the last few months have been climbing back, gaining over 34%. Elastic is a data search specialist, and their AI-powered platform is tailored to streamline local data searches. By enabling swift and efficient database queries, Elastic empowers its clients to extract greater value from their data. Their solution is a cloud-based platform that leverages generative AI to create a seamless service for real-time data searching. This cloud-native approach eliminates the need for users to install or maintain AI-capable infrastructure. Their integration of AI allows users to interact with the platform through natural language prompts, simplifying data access and analysis. Now, that big drop on their stock chart back at the end of August had to do with their Q1 earnings report, where they did have an earnings and revenue beat, but did make a cut to their future guidance. Fast forward to November 21st, they shared their Q2 earnings report, once again an earnings and revenue beat, and this time they increased their future outlook. They reported Q2 earnings per share of 59 cents, beating analyst expectations by 21 cents per share, and revenue climbed about 18% year over year to $365 million, which exceeded estimates by about $10 million. They saw their cloud revenue grow 25% year over year and also announced a CFO transition. Looking forward at the full year, total revenue is now expected to be between $1.45 and $1.457 billion, representing a 15% year-over-year growth at the midpoint. Other highlights from the quarter included their number of customers spending over $100,000 increasing to 1,420 and seeing strong demand for their vector database with new customer commitments for their Gen AI almost doubling in dollar volume. Recently upgrading their rating on the stock was Wedbush analyst Dan Ives. He said it is time for the broader software space to get in on the AI party. The firm believes the use cases are exploding. The enterprise consumption phase will begin in 2025 with a launch of large language models across the board, and the true adoption of generative AI will be a major catalyst for the software sector. Elastic is rated a strong buy based on 23 current analyst ratings, breaking down to 18 buys and 5 holds. And the average price target of $131 implies an upside potential of about 27%. Looking at those ratings down below, on the low end, we do have a hold rating here at 110 for an upside of 6%, while our high-end price target comes in at $150 for an upside of nearly 45%. For our second stock today, we're taking a look at Gitlabd. They trade under the ticker GTLB, currently priced just above $60 per share. This is one we talked about before, most recently at the start of October. Over the past year, they are down 5% overall, and in the last 3 months have climbed 12.5%. Gitlabd is known for its work in software development, security, and operations, or DevSecOps. The company offers its users and customers an AI-powered DevSecOps platform based on open source code and using the freemium sales model. At its heart, the Gitlabd software platform allows users to put all of their DevSecOps work and tools in a single unified platform for a smoother and more efficient workflow. They use AI tech to provide in-software assistance for users and makes AI available to those users across the full cycle of the software development process. Just a couple of weeks ago, on December 5th, they did share their Q3 earnings report, where they had an earnings and revenue beat, guidance that topped expectations, and named a new CEO. For their third quarter, they reported earnings per share of 23 cents, beating estimates by 8 cents per share, and total revenue of $196 million, beating estimates by $7.75 million and growing 31% year over year. They announced the appointment of Bill Staples as their CEO as their co-founder transitions to an executive chair. Looking forward for Q4, they're now anticipating revenue of over $204 million. Other highlights from the quarter included some significant new customer wins like the Emirates and LATAM Airlines and high demand for their Gitlabd Ultimate, with it reaching 48% of their total annual recurring revenue. On December 12th, a 5-star analyst from Macquarie initiated coverage on the Gitlabd stock with a buy. They said that Gitlabd is the top pick in the analyst coverage and has emerged as a key vendor in the rapidly evolving developer securities operation toolchain with an AI-powered platform that is useful to managers, developers, testers, IT operations, security teams, analysts, and more. They're bullish on the investment opportunity and view the company as a valuable strategic and financial asset, adding that the consensus revenue expectations through 2027 look beatable. With 23 current analyst ratings, the Gitlabd stock does come in as a strong buy with 20 buy ratings and 3 holds. The average price target comes in just above $80 per share for an upside potential of 34%. Looking at those ratings down below, our low-end price target is a hold at $65 for an upside of over 8%, while we have several high-end price targets at $90 for an upside of over 50%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Datadog. They trade under the ticker DDOG, currently priced at $150 per share. This is another one we have talked about before. I believe most recently was around the start of August. Over the past year, they have gained 22%, and in the last 3 months are up 28%. Datadog is a leader in the field of real-time data analysis. They offer cloud monitoring as a service, giving customers subscription access to a platform optimized to monitor systems infrastructure, app performance, access log, real users, and more. They use AI to automate these tasks, speeding up the process and enhancing the platform's built-in scalability. Users have put Datadog's products to work in smoothing out digital transformations and cloud migrations, team collaborations, accelerated marketing schedules, and troubleshooting. Datadog shared solid Q3 results back on November 7th with an earnings and revenue beat and an increase to their future guidance. They reported Q3 earnings per share of 46 cents, beating expectations by 6 cents per share, while their revenue grew 26% year-over-year to $690 million, beating by over $25.5 million. Looking forward, they're anticipating fourth quarter revenue between $709 to $713 million, and for the full year to be between $2.65 to $2.66 billion. They ended the quarter with approximately 29,200 customers, up from 26,800 a year ago, and their customers with annual recurring revenue over 100,000 increased to 3,490. They also generated free cash flow of $204 million with a free cash flow margin of 30%. Recently increasing their price target on the stock was a 5-star analyst from Mizuho. They increased price targets on several companies within the software group, which was largely a reflection of recent increases in comp multiples. They believe the most important trends benefiting software vendors today and in the future are digital transformation, generative AI, data and analytics, and contact center cloud migration. They believe the industry's risk versus reward is more balanced entering 2025, but still attractive overall. With 30 current analyst ratings, Datadog does come in as a strong buy with 28 buys and just 2 holds. The average price target comes in just shy of $160 for an upside potential of 6.6%, but if we look at some of the more recent ratings, you'll see some higher upside potentials there. Our low-end price target is a buy from back in November with a downside of 4%, as we've already surpassed that price target, while our high-end price target comes in at $200 for an upside of nearly 34%. So that is a quick look at 3 strong buy software stocks. Let me know your thoughts on these companies and other stocks in this sector that have been catching your eye lately in the comments down below. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a very Merry Christmas, and I'll see you back here next time.